Every single one of us walks through one of these doors. But here's the secret they don't put on the sign. You don't get to choose which one. Your name, your background, the first $100 you ever deposited, it wrote an invisible application for you. And on the day you turned 18, the system mailed you a permanent report card. You've been living with its consequences ever since. The interest rates you're offered, the fees you can't seem to waive, the investment opportunities that never land in your inbox, they're not accidents, they're your grades. Today, we're conducting a full audit, not just of your money, but of your permanent record. For the next few minutes, I am your academic advisor, and we are appealing your placement. This isn't just about net worth, it's about access, psychology, and cost of capital. Think of it as 3 separate schools in the same district with wildly different funding. First, Tier 3, the struggle tier. Net worth less than $30,000. Consider this the vocational track. The system's goal for you here is not education, but extraction. You are not a client, you are a revenue stream. Let's get surgical with the math they hope you'll never do. The average overdraft is triggered by a $24 transaction. The average fee is $35. If that overdraft lasts just 3 days, the effective annual percentage rate, the APR, is over 16,000%. Now, let's scale that horror. In 2024, banks collected $12.1 billion in these fees, but it's not evenly distributed. 80% of it came from just 9% of customers, the ones living paycheck to paycheck. This isn't banking, this is a poverty tax, a deliberate, algorithmic harvest of financial insecurity. When you're in this tier, every financial product is designed to be a one-way door into a more expensive room. Take payday loans. The average APR is 391%. A $375 loan often snowballs into over $500 in fees. Only 14% of borrowers can repay on time. The rest roll it over, with 1 in 4 rolling it over 9 or more times. It's not a loan, it's an indentured servitude contract. Or subprime auto loans. Credit score below 600? You're looking at 15 to 21% APR. On a $30,000 car, you'll pay nearly $13,000 in interest versus $4,000 for someone with good credit. That's a $9,000 penalty for being poor. And if you get so frustrated you give up and go unbanked, you pay roughly $3,000 a year in check cashing fees, money orders, and prepaid card fees. Over 30 years, that's $90,000 in direct costs and nearly $300,000 in lost investment gains. The psychological curriculum here is Scarcity Mindset 101. You're taught that money is for surviving, not building, that you are always one misstep away from disaster. And that lesson is incredibly profitable for someone else. Now, let's move up. Tier 2, the middle tier. Net worth between $30,000 and $1 million. This is the college prep track. Congratulations, you've been promoted. The extraction lessons are mostly over. Now you're in Illusion of Advancement class. You get access to programs with names like Gold, Platinum, and Private Client. They give you a dedicated banker, which is often just a glorified customer service rep, a fancy metal debit card, and rewards bonuses. Let's decode what's actually happening. It's the Park Your Cash trap. Bank of America's Platinum Honors requires $100,000 in combined balances. You get a 75% credit card rewards boost. Sounds good, but parking $100,000 at their 0.01% APY instead of in a high-yield savings account at 4% costs you $4,000 per year in lost interest. Does your rewards boost cover that? Almost never. You're not getting a perk, you were buying a badge with your own lost yield. Then there's the rigged rewards game. A Federal Reserve study found rewards programs move $15.1 billion annually from low credit score customers to high credit score customers. It's a direct wealth transfer. The person with a 780-plus score earns about $1,000 net benefit per card. The person with a subprime score pays $640 more in interest than they get back in rewards. You're sitting in a classroom where the A students are quietly funded by the C students' tuition. You might get a mortgage or loan discount, like 0.25% off an auto loan. But to keep that discount, you must maintain a $50,000 balance earning nothing. It's a break-even proposition at best, designed to lock in your liquidity. The psychological curriculum here is Complacency 201. You're made to feel valued, privileged even. You're given just enough perks to keep you from asking the real question, why is there a door I'm still not allowed through? Now, let's go to the top. Tier 1, the capital tier. Net worth over $1 million. This is the university board track. Welcome to the teacher's lounge where they write the syllabi for the other two tracks. The rules of money here are not just different, they are inverted. Advanced Course 1, Securities-Based Lending. Think of it as the print your own money module. You have $2 million in stocks. You need $200,000 for a home renovation. Do you sell? Never. Selling triggers capital gains taxes. You call your private banker at JP Morgan or Goldman Sachs. You borrow against your portfolio at 4 to 6% interest. The money hits your account. You pay no taxes. You don't sell a single share. This market is worth $138 billion. It is the exclusive credit line of the wealthy. Advanced Course 2, Buy, Borrow, Die. This is the literal name of the strategy, and it's the estate planning masterclass. Step 1, buy appreciating assets, stocks, real estate, private equity. Hold them. Defer taxes indefinitely. Step 2, borrow against them to fund your lifestyle at 4 to 6%. Loan proceeds are not taxable income. Step 3, die. Your heirs receive the assets with a stepped-up basis. The million in gains you never paid tax on? Erased. They inherit at the current value and can sell immediately, tax-free. This isn't a loophole, it's the core curriculum for Tier 1. Advanced Course 3, the private markets. To be an accredited investor and access hedge funds, private equity, and pre-IPO startups, you need $1 million net worth or $200,000 annual income. Only 14.8% of households qualify, but they control 78.7% of all private wealth. The average company now stays private for 10.7 years. The massive growth happens in these private, invitation-only classrooms. By the time a company IPOs in Tier 2 can buy in, the exponential gains have already been captured by Tier 1. The psychological curriculum here is Capital as a Tool 401. Money isn't for buying things. It's a key that unlocks physics-defying financial principles. This placement isn't random. It's systemic. Let's look at the demographic data that acts as the admissions board. The median white family net worth is $285,000. The median black family net worth is $44,900. That is a 6.3 times difference. The median black family starts in the struggle tier syllabus. The median white family starts in college prep. The result? 20% of white households reach millionaire status, gaining Tier 1 access. Only 5% of black households do. Another result? 10.6% of black households are completely unbanked versus 1.9% of white households. The system replicates existing societal hierarchies. Your starting point heavily influences your financial track. You cannot change the system today, but you can change your relationship to it. This is your 10-step appeal process, your transfer protocol. Step 1. The transcript request. Over the next 2 weeks, download every statement from the last year: checking, savings, credit cards, loans. Use highlighters. Mark every fee, overdraft, ATM, monthly maintenance in pink. Mark every interest payment in yellow. Mark every reward or cash back credit in green. Now, tally the pink and yellow. That's your current tuition cost for being in your assigned tier. This number will shock you. It is your motivation. Step 2. The school transfer. In week 3, move your core checking and savings to a local credit union or a neobank like Ally, Chime, or SoFi. They are structured as not-for-profits or low-overhead digital banks. Their business model is not fee harvesting. This single move can save you $500 a year instantly. Step 3. The $1,000 hall pass. Over the next 1 to 3 months, build this. This money sits in your new checking account and is never touched for spending. It exists solely to break the overdraft cycle. This is not an emergency fund. It is system resistance capital. Automate a $50 or $100 weekly transfer until you hit it. Step 4. Rewards audit and optimization. In month 3, look at your highlighted green rewards. If you have a card with a $95 annual fee, calculate this. Did your cash back minus the fee exceed what a 2% no-fee card would have given you? If not, cancel it. Switch to a simple flat-rate cashback card. Stop playing a rigged game. Step 5. The strategic balance maneuver. This is ongoing. Once your credit score is above 740 and you have $20,000 or more in savings, you can strategically play the tier game. Here's how. Call a big bank like Bank of America. Ask, what is the minimum balance to qualify for Platinum Honors and have all fees waived? Park only that minimum in their savings account, accepting the terrible interest. Keep the bulk of your cash in a high-yield account elsewhere. You now get their best credit card rewards, use that card for all your spending, and you pay no fees. You have turned their game against them. Step 6. The accredited investor proxy. This is a long-term play. You don't need $1 million to access private market-like returns. Your proxies are angel investor funds. Platforms like AngelList allow smaller commitments into startup syndicates. Growth equity ETFs, funds that buy into companies post-IPO but still in high-growth phases. And REITs in BDCs. These provide exposure to commercial real estate and private lending. Step 7. Learn the language of capital. When you talk to a banker, stop asking for a loan. Start asking, what are your relationship loan discounts for a client bringing over $50,000 in assets? Do you offer portfolio line of credit options against my investment accounts? What is the process to be considered for private banking services? This language signals you understand the curriculum and you will be taken seriously. The ultimate goal is to write your own syllabus. Your new core classes are cash flow engineering, automating your finances so money flows to assets before expenses. Credit as a strategic tool, using 0% APR offers in low-interest loans to fund opportunities, not liabilities. Tax efficiency, understanding how HSAs, 401ks, and Roth IRAs are legal structures that replicate Tier 1 tax benefits, and building your personal bank, using financial tools to become your own lender over time. This system counts on you accepting your report card as fate, on seeing your financial life as a series of random bills and fees rather than a designed curriculum meant to keep you in your assigned seat. For the next 48 hours, you will see the evidence everywhere, in the fine print on your credit card statement, in the convenience fee for paying a bill, in the investment ad that says past performance is no guarantee of future results, while private equity firms market their 20% annual returns to their exclusive clients. Your assignment is step 1, the transcript request. Look at your pink and yellow highlights. Until you do, you are passive student in a class you never signed up for. After you do it, come back. Tell me your tuition cost. Let's build a study group of millions. Let's appeal our placements together. If you're ready to change your financial grade, hit subscribe. We have a lot more syllabi to tear apart and rewrite. Class is in season. I'll see you next time.